Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 9th of January. Starting off with Amex, where it looks as though the shares have broken out or are breaking out of their falling wedge, which has been in place since the beginning of October. That resistance line there around the 0.9 level, above that on an end-of-day close basis, looking for a retest of December resistance and late November resistance at 1.2 pence. Stop loss obviously just back below the 0.9 pence level. Bid stack continuing to suggest that the shares have basically overshot on the downside below 10 pence. So we just had that 1 day below the 10 pence level during December. Since then, support coming just around that particular round number, breaking that resistance line there from November, and obviously looking for a retest at least of the late December high at 13.65 in the first instance. If you're cautious on the stock, maybe wait for a break of the RSI above the neutral 50 level versus 42 at the moment. Stock which is good to see come back to the bullish tact today after extended crawl along the 50-day moving average. That tends to be quite a good sign for a stock or a market. We saw that with Sirius Minerals for several weeks before the bid that was announced yesterday. But in the case of Canadian Overseas, pushing higher above the 50-day line at 0.07 effectively. Initial target there, the 200-day line at 0.1, and then we can clear that looking for post-July resistance at 0.2 pence. Stop loss back below 0.06 if you can manage that. Another stock which is back after an extended disappointing phase is JKX Oil and Gas, breaking out of its recent falling wedge from August with a gap to the upside, gap through the 50-day moving average as well, which is another plus point. 50-day line at 25 pence, end-of-day close above that should be enough to give this shares momentum to hit the 35 to 40 pence area, which was or is the area of the 200-day moving average as well. And the stop loss can be just around the 24 pence mark on that particular situation. Looking for the next stock, and that comes in the form of metals exploration. Doesn't look like this is an urgent one, but basically we've got a rising trend channel there from February. Top of the channel heading for 2.25 pence, and that's a valid target over the next 2 to 3 months while we hold above the support line of the channel and the 50-day moving average at 1.15 pence. One of today's rises it comes in the form of plant healthcare. Here, gap through post-August resistance, which is normally a good sign when you just gap through a level like that. And the view at this stage is while we're above the 50-day moving average and the floor of the June trend channel, looking for a target as high as 14 pence at the top of last year's trend channel. And that could happen in just a matter of a few weeks. Stock which pulled back from its best levels, but looks as though it's trying to revive now is Science Therapeutics, breaking that resistance line from December around the 350 pence mark. While we're above that, looking for at least 400 pence obviously, and which was today's intraday high, and then on to the 50-day line at 434 pence. But good to see that the support there for January well above previous September resistance, even though we have bear trapped below the November floor. If you are cautious on the stock, maybe wait for an end-of-day close back above November support at 366 before assuming that the coast is clear once again on the long side. Finishing off with UK Oil and Gas rather. Don't normally cover this because anytime there's any tends to be that anytime there's any strength in the stock there's a placing, but just to let you know, the shares have broken out of the falling wedge from August. The resistance line there breaking at around the 0.83 level, and while we're above that, there's a chance of a move towards the 200-day moving average at 1.04 pence. But obviously, the history of the shares has not been great. We tend to not have the kind of follow through that you would expect given these setups. So you can see that we had that situation in August where we broke falling wedge and came back after a reasonable rally there in that situation. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.